On today's show, we have Darius, the co-founder at QCP Capital. QCP Capital is an innovative firm leading the charge in digital economy trading in Asia. Darius, thank you for joining us today. Why don't we start with an intro about yourself and a little bit about your background?
Thanks, Joe. Good to be here. QCP Capital, I'm one of the co-founders. We started in 2017 with a two-man prop shop. I come from a traditional markets background in a hedge fund called Diamond Asia, and then after that, I was managing Asia FX book at BNP Paribas. So we started QCP Capital 2017. Now, across our related entities, we have about 80 people, mostly based out of Singapore, a couple in Australia, a couple in Ireland, but the team's mostly out of Singapore. We do a couple of things. So QCP Capital itself, the trading franchise, we focus a lot on crypto trading in Asia, particularly Southeast Asia. We quote crypto in rupiah, Thai baht, ringgit, peso. And we partner up and we own exchange infrastructure in Asia as well. So Toko Crypto we're one of the shareholders there, the biggest exchange in Indonesia. So Southeast Asian focus is one piece. Another big piece for us is we are market leaders in the crypto options market. We run a book in excess of $2 billion there, trading across exchanges, OTC, and in recent times, very interesting, very exciting is DeFi options market. So that market has grown very big as well, and we are dominating there. We trade in excess of $1 billion a month in DeFi options, so something to talk about. So QCP Capital, the trading franchise, Asia focus, options and derivatives focused. We also have an asset management company called Phillip Street Partners, and we have a macro fund as well as a ventures fund. Both have been run privately and continue to be run privately for now. We will be launching public funds soon. Our venture side has done particularly well. We've been investing for the last couple of years, early days in infrastructure like Darius, Toko Crypto. We invested in a lot of the layer ones as well. We were seed investors in ALGO, Luna, Terra Luna, and AVAX. And in more recent times, I guess in the last 1 year or so, we've been doing a lot of DeFi investments early in a lot of DeFi projects. We were seed investors in XC Infinity as well, and a couple others, DYDX and whatnot. I would say our focus is trading franchise, trading focus, and then ventures as well.
So right now, I guess what percent of the whole portfolio is on the trading side?
Oh, the trading side, we run a large options book. So we are client facing as well. So that's in excess of $2 billion, and the venture side is about $1 billion.
All right, and can you go into on the options side, maybe do you guys participate on centralized exchanges or on decentralized exchanges?
We are one of the key shareholders of Darius, and we've been on there since early days. We were very active early in the Ether options market. We sort of brought a lot of volume there as well. So Darius, OTC, that forms a lot of the volume. And in DeFi, I think the phenomenon that we've seen recently has been the rise of the DeFi options vaults. DeFi options, because it's a non-linear product, DeFi has in the past 1.5 years or so, has lent itself very well to linear products, right? So spot, it's mostly been borrowing lending, over collateralized borrowing lending, spot perps, as well as AMMs, So the problem with that, it's without intermediary in DeFi, it's very difficult to manage non-linear products, So linear products, no problem. But the problem with that, as I mentioned, was that in a lot of these protocols, the yield comes from token distribution, right? So it's almost circular in effect, right? You are printing tokens to give it as a reward. So the yield comes from the tokens rather and not really organic per se. What we see in these DeFi options vaults is that because of the non-linearity, you actually bring a very high base yield, right? So the yield doesn't just come from tokens, it comes from the monetization of the volatility of the underlying asset. So to us, I think that brings us into a new phase of DeFi where bulk of the yield doesn't come from tokens, but organically from the product itself. The difficulty with this is that, without intermediary, it's very difficult to manage liquidations for non-linear products. It's not like spot where you can just liquidate, right? If you liquidate options, you can square off the delta risk, but then you have the other Greeks to manage. Even with Darius, it is a bit of a struggle. Intermediaries have traditionally been a very key part of this sort of trading product, but DeFi has had to take this market structure where the traditional finance guys have never touched before. The question of how do you manage non-linear liquidations when there is no intermediary. And this is very exciting to me because, this is something really new that is greenfield even for traditional finance guys. I think the DeFi options vaults brings a solution, a very elegant solution to it. Yeah, so I think that's very exciting for us. And we have been trading a lot of that. And I think going forward, this is the way that DeFi options and structured products will be traded in DeFi. It will be through these options vaults.
Now, I know in the US here, we have pretty limited access to different types of options, so maybe for the investors that are listening, I think right now, like through LedgerX, you can kind of access to Bitcoin and Ethereum. What are all the different pairings or tokens that you guys are currently trading, and how do other people get access to that?
Yeah, so that's really interesting, right? Because even though in the last few years, we've always tried to create new altcoin options markets, the CeFi options market is dominated by Bitcoin and Ether. And altcoins have never been able to scale there. But, with this DeFi options vaults, we've actually been able to create very scalable altcoin markets. So, last week we launched a $10 million Algorand vault. We've been trading about $2 million Luna vault. We have AAVE, AVAX. We even have, sort of dollar spell that's coming into the fray. Very exciting, right? I think, where CeFi has failed to create scalable altcoin options markets, DeFi might actually succeed. And the success there might then spread back into CeFi, where with cornerstone liquidity from the DeFi options markets, we can then create more altcoin options in OTC as well as on centralized exchanges.
What is the protocol, or where can people find out about those DeFi option vaults?
The main and first one was Ribbon Finance.
Okay.
That was the first one that emerged, and they came up with this elegant solution. Another one that has been coming up with a lot of the altcoin options is Thetanuts.finance. So THETANUTS, Thetanuts. They have been pioneering the cross-chain element to it, as well as a lot of the altcoin options focus. So I think these two are worth looking at.
And from a user standpoint, like what are the benefits for people to trade options? I think most people that are listening are typical investors that buy spot, kind of hold long term, and may not be fully understand what the benefits of options are. Can you break that down a little bit?
Sure, of course. I mean, the options market is a financial derivative. You can either monetize the volatility by getting a high yield by selling options. So the typical yield on options carry strategy can be anywhere from 50% to 150%, right? Which is higher than the usual just staking. And if you want to take leverage, you can always buy options. Of course, that's expensive because you have to pay the premiums. It's a good way to create leverage, right? Because you pay the premium, you're able to level up your position without taking too much risk on the other side. So, for example, if you want to be long, you buy an option, you have additional upside, but your downside is limited. So that's one way to do it. And then in between, you're able to structure by selling some, buying some, different spreads and various other types of structures where if you want a specific outcome from your trading strategy, options are a good way to structure that.
How does one go about trying to price the options and get an understanding or education on that?
Well, I mean, options pricing, it's a pretty standard Black-Scholes type of thing. Just that the difference is in that crypto, the volatility is extremely high. So just to give you some context, right? Exotic FX pair like a dollar INR, Indian rupee, is about 4% implied volatility, whereas Bitcoin is about 90% and Ether is above 100%. I would say the pricing is not so much on the pricing, but more of taking the market prices it quite efficiently. So you have exchanges like Darius or even coming to us OTC, you'll be able to get some price discovery there.
Who's going to be like the biggest, I guess, users or investors of options? I'm kind of always trying to gauge how big that market is, even when it comes to some of the decentralized protocols, but also from a regulatory standpoint. I guess when institutions come in and trade, they also are held to more regulations, where retail, maybe not so much, but it might be less trading volume.
Well, I mean, the easiest entry is this carry strategy, right? If you're long, if you have dollars and you don't mind being long Bitcoin, you can always sell puts. If Bitcoin drops, you earn the yield, and if Bitcoin drops, you can exercise. You're long Bitcoin. If you're long Bitcoin already, and you sell a call at a level where you don't mind selling the Bitcoin at, you earn a yield, and if it gets exercised, you sell the Bitcoin. So that's a simple cover call, cover put strategy. That's sort of the easy segue to it. Then, for speculators or guys who want to hedge their positions, then you go long options, right? For the leverage as well as for the protection. I would say the typical retail investor looking for carry and yield, they do the covered call, covered put strategy. Then the more speculative investor or speculative trader is the one that buys options. Institutions come with a mix of both. They are both either hedging or taking speculative positions. I mean, just today we actually had our biggest ever request for Bitcoin call options, right? Somebody was requesting 10,000 Bitcoin notional, which is, this kind of size, I only really saw it when I was trading traditional finance, right? But now we are seeing that kind of size in crypto as well. And they're buying calls in this case, I'm not sure whether they're hedging or whether it's a speculative position. It could be both. It could be either, right? They could be short Bitcoin and buying calls for protection, or they could have a long view on Bitcoin and buying the calls. So, a mix of both depending on what the strategy is. But, that's sort of the basic overlay of the landscape.
So typically when they're coming and buying these calls, is that more of a short term, or is that like a more long duration, a year out?
No, I mean, this time, I think the average crypto option, is anywhere from a month to 2 months. Given the volatility and the shorter market cycles, you don't see that many people buying long-term options. Also because of the very expensive premium. So I would say, the typical length is 2 weeks to 2 months. I think that tends to be the typical expiry or tenor of the option.
Now, all these options, like you mentioned, the vaults and so forth, where people can participate in DeFi options, do you think it's sustainable with kind of regulations and derivatives and laws maybe within the US? Or how do you kind of see this playing out from also an investment standpoint?
No, I think it's extremely sustainable. The good thing about DeFi is that there is no particular jurisdiction to this, right? So whether you're an American investor or investor from any part of the world, you're practically anonymous when it comes to a DeFi interaction. I mean, we've had conversations with regulators, and they're all scratching their heads as to how do we regulate DeFi? Who do we regulate? How do we do it? There is no geography, there is no border when it comes to DeFi. It's a bit of a funny story, right? Like earlier, like 2 months ago, at Mainnet in New York, SEC was serving the various DeFi founders and various protocol founders, and these guys are like, why are you serving me, right? I mean, what exactly are you, who exactly are you serving, and where are you serving? We're not domiciled in the US, and then, I think one of the guys actually countersued the SEC.
Yeah.
So, I mean, it's a tricky situation, right? It's difficult to regulate DeFi. I think the most that the regulators can do is probably regulate the gateways in the crypto. So, the fiat to crypto to fiat kind of portal, so to speak. Regulating DeFi itself, I think that's tricky. So, I think it'll take a while before there comes to some kind of understanding there. And in the meantime, anybody who is already in crypto, these DeFi protocols are fully accessible to them. So, we've seen how quickly it scaled in the last couple of months. And I think we can see how quickly it will scale going forward as well.
Do you think we'll see more like a type of whitelist or KYC type of wallet addresses in the future to kind of interact with these protocols? Or
yeah, I mean, this permission DeFi market is something that we've been exploring with the Singapore regulator. So MAS has been very, very proactive and very progressive in terms of their regulation. They are looking at doing permission DeFi markets, but I think it will be two different segments, right? The unpermissioned or the permissionless DeFi market will continue running and continue scaling on its own. There aren't much regulatory hurdles for that.
And you think that's just going to be the ultimate more peer-to-peer transactions?
Exactly. So, like I mentioned, once your cash is converted and you're in crypto, sort of the DeFi world is your oyster, right? You can sort of come in and out and, very hard to get tracked. Essentially it's just a wallet, right? So I do think it's scalable, to answer your question. So, it's, I won't say peer-to-peer, but, peer-to-protocol. So that works quite well.
Kind of what are some requirements when you guys are picking certain options? Is there certain trading volume? What are those things that in order to be in the portfolio?
We are in a position where we are the ones creating the market. So, we're the ones making prices on them. So internally, when we decide what we can or what we will price, pretty much anything, right? Anything that has a formalized market, decent enough trading volume, legitimate settlement, clarity on what the asset is, we're more than happy to price. So we're not like the buy side where we're choosing what to invest in. We are actually more of the creator of the market. Pretty much anything goes, right? As long as I can charge a spread on it, I'm happy to make a price.
What are you seeing as the benefits or the differences between the centralized exchanges and the decentralized?
Yeah, so Centralized exchanges, they're great. I mean, I'm one of the key investors in Deribit as well. They own the Bitcoin Ether market on a listed Bitcoin Ether market, and they function very well, right? The exchange functions well, but of course there are obstacles in terms of flexibility, launching new products, making sure that the infrastructure is ready, that the order books are stable. So they're a bit slower in terms of launching new products, which is why I guess it has taken a bit more time. Deribit is about to launch Solana options, which is a great step, I think, before we see others. But go to market is a lot faster on DeFi side because there are less restrictions and less concerns about that. So I would say speed is one important thing that the DeFi side has over the centralized markets. But of course, I think the centralized markets are still a lot more stable in terms of infrastructure. They are set up to be an intermediary. It's easy to cross trade on them, and it does solve quite a few problems when it comes to trading.
For those that are obviously looking to invest in different projects out there in DeFi or around options, I guess, what are you seeing out there as some leaders currently?
I mean, for us, the question that we are asking right now, as we invest in this new wave of projects coming up is DeFi, the way it functioned, it started well and, it was very scalable. Question for us is, what's the next wave of DeFi? What's that going to look like, right? Is it going to be the Olympus DAO type of a situation with the algorithmic stable coins and whatnot? Or is it going to be scaled up through financial products on DeFi and innovations of how we trade financial products on DeFi? So our thinking in terms of longevity and scalability is possibly the latter, where these are products that are familiar to traditional finance guys, that are useful to crypto natives, and have been traditionally scalable in traditional markets already. And with the right innovations, they are also scalable on DeFi. And we think that this is possibly where the next phase of growth for DeFi will be. Products where you have proven scalable types of financial structures and instruments traded on DeFi.
Is there any projects in particular that look like that?
So I mean, a good one was Ribbon Finance. They were pioneers of this DeFi options vaults. Up and coming one is Thetanuts, like I mentioned. There are a few on Solana as well. Friction, Tap Finance, Katana. I think these are all interesting ones to look at.
How do you guys, for your book or even on the venture side, how do you guys underwrite these positions, right? There's so many DeFi projects being launched, even from a retail investor side, that it can kind of get overwhelming in determining maybe what positions to take or which ones to go into. How are you guys making that decision? How are you underwriting?
We always take a thesis-driven approach to this. So we always have a very clear thesis on what we think is the next wave or the next theme that we want to be long on. For us, the longest mainstay has been layer ones. I think, in line with the Fed protocol thesis, layer ones are scalable protocols that, other projects build on. Layer ones are always a good investment. So that thesis has always led us to pick undervalued layer ones, so laggard layer ones, something that it's a constant mainstay, and we do size our bets there according to the market potential as well. So layer ones sort of form a base layer for our fundamental thesis there. And then, we have thematic plays, right? So, play to earn was a very big one for us. We saw that as a new gateway, a new entry point for non-crypto folks to enter crypto. So play to earn was a big one for us. We invested in Axie Infinity at the seed round as well. And we continue to look for other games that are scalable in the same way. Yeah, so right now, I think, for us, the big theme is DeFi 2.0. What does DeFi look like? And therefore, we are looking at some of these protocols that potentially could be scalable in the next wave of DeFi. So yeah, I think, we do take a very specific stand to things. I think that helps us to narrow down who we speak to and who we focus on. Because like you say, there are a million projects, right? You literally could spend every single minute of every single day talking to projects and you still won't finish. But yeah, I think that helps us to focus. We do have themes in mind.
Is there any top three characteristics of a project that you look for, or the team or something that quickly makes the cut to continue due diligence?
Of course, for us, founder is important. Founding team is important. Community is important. And of course, the other supporters of the project are important. I think these are the three elements that we look out for and that we grill project teams on. If these meet the criteria, then we can sort of move to the next stage and talk about valuation, tokenomics, and whatnot.
And how important is communication with the team and just kind of that initial relationship?
Oh, this is extremely important. I mean, in the end, it is still a venture strategy. Understanding who is leading the project and their track record and their ability to execute is extremely important as well.
When you guys determine like these long positions, does that mean 6 months, 12 months, 36 months, 5 years, or do you guys cut a portion at a certain time?
Typically, we are long-term holders, right? And if the project has done very well, very often we might take off our initial investment off the table slowly. We also have this thesis that crypto as a whole is still very underowned, right? I think I was at a financial markets conference a couple of weeks ago, and we asked, sort of poll the audience, and only about a fifth or a quarter own a Bitcoin, right? So there is a lot of room. There is a lot of room there for ownership. So, we think that in general, we are still in that phase where adoption is happening and people are slowly getting into the space. So we do tend to hold our positions for a long time. But with that said, there is a lot of leverage in the space, so based on macro factors and what we see as, overinflation of prices, overvaluations, we do take positions out. But by and large, I think the projects that we invest in, we are in for the long haul.
I mean, how many positions or projects do you typically manage on the book at a time?
A lot of them are just buy and hold, right? So I think we do have probably over 100 positions at least. But, small pieces here and there, not so small ones, they've grown. Sort of buy, park it aside, maybe take some off the table sometimes. But by and large, we don't trade that often. We actively trade those that we make option markets on. That's where our active trading focus is, right? Less so on the stuff that doesn't have an options market on them.
And are you guys participating a lot within the project's governance and kind of moving along and accelerating that project?
Oh yeah, we are very active investors, right? So we are on constant calls with the teams, trying to problem solve for them, seeing where we can mix and match the various projects in our protocols. I mean, DeFi is a bit like Legos, right? They build on top of each other and they build with each other, especially when you enter a cross-chain world where, you no longer have these camps where, you have one ecosystem and just another ecosystem. You will have a cross-ecosystem play. So there is a lot of work to be done in terms of, collaborations and helping them to mix and match, advising on governance. We're active in that as well. But yeah, that's a big part of the whole investment effort as well.
I mean, some of these assets might have thin trading volume. How do you guys kind of determine your initial position sizing?
That's a great question, right? The truth is that, I was speaking to Paul Tudor Jones last week, and he was, I was telling him, this is the size of our portfolio, and he was like, stop, that's the size if you can get out, right? So the truth of it is that, it's true, right? If you can get out, right? A lot of these projects, very small circulating supply, and a lot of that is based on the small circulating supply. A lot of the pricing is based on the small circulating supply. If you bring in the full supply, that might change. But the way we manage it is, I think one approach is trying to increase liquidity by making options markets on them. So, if you see this as a playbook from traditional finance, right? Illiquid stocks or illiquid instruments, you create derivatives markets on them. Naturally, you bring in leverage, you bring in more players, the liquidity thickens. We've seen this for Bitcoin, Ether. With derivatives markets, the spot markets get much thicker as well. So I think one of our plays is, in order to increase liquidity and also to hedge our own positions, actively creating an options market for them is a very effective tool.
I just feel like so many investors these days, smaller investors, right? They always seem like the best positions that outperform the most is always their smallest bet. Is there any better guidance in how someone should maybe determine a percentage of the book or what percentage of allocation when they're going into a new project, or to step it up over time?
I would like to say that I have a formula for this, but I don't. Our investment sizes have been anywhere from 50K to $10 million, right?
Okay.
I think, general guide is, layer ones, we tend to be able to put more, scale up to the end of it. Recent one for us was like Woo Trade. We did about $8 million ticket there. And we scaled up because, that protocol lent itself to more volume, right? The project is an exchange and it's a lot more scalable in that sense. So we sized up on that basis. But a lot of the more experimental projects, we tend to take smaller clips. A lot of them, in the first place, they don't have that much allocation for you. They tend to be oversubscribed.
Yeah.
So sometimes the sizing is not our choice. It's the choice of the protocol. I mean, for example, I think we did 100K in Axie Infinity, right? Should have sized that up more. But, back then, we were like, not even sure if we were going to make money on this. Turned out to be our best investment ever. But back then, based on the the outlook and given that it was a super early mover, we sized it according to what we thought our risk appetite was on that basis.
Yeah, and that's kind of what I was alluding to back, that some of our best positions over the last couple of years has been the ones with the smallest bets, and you kind of
Exactly right. But I mean, something hard to avoid, right? I guess there is no magic formula to this. It's a mixture of what you get and what you perceive to be the risk at the time.
Let's hit on the layer ones, as you mentioned. That's kind of where you can allocate the most amount of capital. And there's always a lot of questions around, whether it's Ethereum, Solana, multi-chain, Algorand, all these different chains. How do you see this play out over the next 3 to 5 years? Is there a couple key winners? Does everyone have a certain use case for maybe different sectors? What are you seeing currently?
Right now, I would say the main differences between the different layer ones is, of course, there are differences in the tech. There are also key differences in the community. That's a very big one. But like I mentioned, I think, as we move towards a cross-chain world, you're going to be able to move seamlessly between them, right? So it could be a case of everyone wins in that as long as you are scalable, you have scalable tech, you have a decent community, you are able to bridge between chains, right? There happens to be some osmosis, some kind of diffusion between the communities, and everyone becomes interchangeable. And in so doing, the overall pie could be bigger as well. So I think the way we approach it is, of course, we pay attention to the tech, make sure that there's a good fundamental basis there. But more importantly as well, make sure that there's a cross-chain element to it, sort of bridging cross-chain element to it. And of course, a decent community. So I think these layer ones that are already, have a decent sized community and good tech, I think they will be scalable going forward.
And so you think that there's just going to be kind of a organic growth across all of them?
Yeah. I mean, when you have new entrants in the crypto, the first thing they encounter is going to be the layer ones, right? So, I think as the gateway to dApps and various protocols, I think, layer ones are very scalable on that basis.
As we're seeing some of the restraints of these layer ones from fees, do you believe the next 12 months is all kind of about scaling solutions? And what do you think are some of the leaders that may come out of that?
Yeah, that is a big issue, of course. I think, it's going to be about scalability in terms of fees. It's going to be about cross-chain capability. AVAX is a standout for me in terms of on that basis. Near protocol as well, right? In terms of scalability. Algorand, I think, is one that has great tech, but not as strong a community as the others, right? So these three, I think, are something that I have on my radar.
So let's roll into, I guess, managing cash positions, right? It's always another question. How much percent in cash do you adjust the book as market goes up and down?
Yeah, that's a good question, right? I was just having this conversation with Paul last week. And I think after the conversation with him, I have been moving towards a bit more cash in the book. He mentioned that he hasn't seen such high inflation since the 70s. We discussed the valuations, not just in crypto, but in stock markets, right? Tesla trading at 380 PE, Lululemon trading at 80 PE. And then you have every other, random crypto project, some of them without a product even, trading at $1 billion FDV. The word unicorn is no longer meaningful. There are too many unicorns around. When this happens, I think, there is possibility for it to continue, sort of this virtuous cycle of value. But I am in agreement with him that with a more tricky macro environment next year, as well as the valuations being sky high, I mean, like Shiba Inu worth more than Deutsche Bank, for example. I mean, it just starts to get a bit crazy. So, he thinks it starts to parallel what we saw in the dot-com boom. And it makes sense to sort of overweight cash now as and where possible. And I think that's what we are doing as well.
Well, let's hit on that, go into more details there, because obviously everyone's talking about the markets. And, with the markets being down, people are questioning whether we're going into call it quote unquote bear cycle for a little bit, or we're just consolidating. What do you think is happening in the market?
So interesting one. I mean, we did put this up in our recent market update on Telegram. So the Saturday crash happened. Of course, there was a low liquidity situation. But what was interesting to us is it seemed like a lot of the persistent selling was coming more from the Chinese markets. The reason why we say this is, if you see the funding rates, the perps, they all went negative on the crash, but the Western, more global exchanges normalized very quickly. But I think until today, the Chinese exchanges, OKX, Huobi, Bybit, they are still trading at a negative funding rate. So there is persistent selling there. And one of the triggers for that move down was weakness in the Chinese stock market as well. There is this perception that the Chinese government is getting increasingly hostile to the US due to geopolitical reasons. TT showed intention to unlist or delist from the New York Stock Exchange. There were some continued defaults on some of these property companies. So weakness in the Chinese stock market and then selling on the Chinese side. So it seemed to be a Chinese-led move in poor liquidity, as well as some overall profit-taking stance from the market, because there's everyone's worried about the Fed tapering next year. Plus, you have the Omicron fears that are coming up. So sort of confluence of factors there. But with that said, the market has held up pretty well, and with the persistent negative funding, the pattern that we do see is it tends to create a short squeeze, because then the market has flipped and leveraged on the downside. You have a spot move, you create liquidations on the top side. So we think there is a potential for the market to have one last squeeze up. But after that, as to how the macro environment will look, a bit tricky. I think very, very tricky. But one thing that Paul did bring up was the turn of the calendar year after a year that everyone has done so well. When it goes from 31st Dec to 1st Jan, you have a situation where your 100% profit is back to zero, right? So any drawdown from there is a loss. And psychologically, it does make sense to take some money off the table. That kind of profit taking could trigger a whole, the top of the bull market.
And that's just funds doing their high watermark.
Exactly, yeah. That psychological effect, cannot be ignored. So I think we are very cautious going into next year. I mean, again, one interesting thing that Paul said was that he would never short crypto. So in the back of this is, it is a very under-owned and new asset class. So it could push way beyond your expectations in terms of high valuations. But worth noting that caution is advisable at this point. There are a confluence of factors that could see the market trade lower.
Now, I know a lot of people you speak to, they're kind of hard to make a decision on where things are going in lieu of kind of the money printing across the globe, right? Do you think that has a big influence, or do you think that's kind of just being used and it's an excuse for prices to move up?
I think that's absolutely something that everyone should pay attention to, right? More money has been printed in the last 1-2 years than has ever been before. And the cheap money is fueling inflation, right? And no one can deny that crypto prices have benefited from this cheap money. So the question then is, what happens when this cheap money tap stops? That is a legitimate concern, and I think for us, and I guess it should be a concern for everybody as well. But the other flip side of this is that in an environment where there's high inflation, crypto does promise to be a inflation hedge, outside of the monetary system. So to me, it's about weighing how much of this impact where crypto is a inflation hedging asset class versus the kind of leverage there is in crypto, and how correlated it could be when macro markets fail. I think the strategy that we've adopted is that we think there will be a higher volatility environment, and also a lot of very tail type moves. So we've been buying tail options on both the put and the call side, in case expecting more of this kind of gappy moves that we've seen due to the environment that is sort of uncertain. As to what the direction is, again, hard to predict. I tend to think that we see some softness at the beginning of the year and then we pick up again, but that's a personal view. I think the firm view that we have is, there will be increasing volatility as the macro environment gets trickier.
But long-term, up only.
Long-term, the question is how long, right?
Yeah, 5-10 years, hopefully, right?
And then the question also is, how deep does the correction get, right?
Yeah.
How much cash do you want to keep aside for that? So, two very important questions everyone should consider. No right answer, and whoever gets that right makes a lot of money.
Correct. So we've seen over the years where you have a guy like Warren Buffett that is pay at a fair value and hold very long term. And, the crypto market has been in this thing where has seen these 4-year cycles, and therefore people want to quickly try to gauge the top and bottom. This time, not sure if we're going to see something different, but at least it seems like maybe we're seeing different sectors go off at different times. And kind of already, I think DeFi, it's been since the springtime that it hasn't really done very much to begin with. Do you think it's going to kind of mimic maybe like the stock market where there's sectors that are going to take off at different times for different periods? And unless there's a big correction on the whole market overall, we might see that more frequent?
I think we're already seeing that, right? We're already seeing certain sectors take off, certain sectors that promise more disruption. I mean, the gaming play to earn space has been absolutely crazy. The metaverse theme with Mark Zuckerberg making the announcement as well. So we have been seeing these sector specific moves. Correlations between coins have gone down. But with that said, I think crypto as a whole, is seen as a asset class block. The leverage in crypto is material as well. So if we do get a deleveraging cycle, I think the whole market gets affected. But for hodlers, I think it makes sense to sort of pick and overweight your coins where you think there will be more disruptive value going forward. A notable thing in the recent crash was that Ether held up a lot better than Bitcoin. I think the institutions have been looking at Ether as a possible disruptive solution with the smart contracts and existing scalability of the protocol. So there was a good bit there. Just an example of the correlation starting to break up a bit.
Will institutions have we'll call it better diamond hands versus retail, maybe to the extent that the drawdowns might not be as substantial as we've seen in the past, or are they pretty similar?
I think that's a fallacy because institutions also use leverage, right? So when they get stopped out in a bigger way than the retail guys, right? So that definitely is a fallacy. It's not like we don't see gappy markets in traditional finance as well. Stocks, FX, right? You do see a very, very big false standard deviation events happening. Maybe not as often as crypto, but we do see that because institutional guys are also human, right? They take leverage, and in fact, they take leverage in a bigger way sometimes, and they could cause more systemic risk than the retail guys. So I don't believe in that institutions are diamond hands. In fact, it could be rather the opposite.
So in regard to emotions, how much of the trading strategy is actually automated versus a person doing the controls?
I mean, this is probably more a function of my background, right? I come from a very discretionary macro background. So a lot of our trading is quite discretionary. We do automate certain segments of it. But the overall strategy is also tends to have there's some systematic element to it. But the execution and the calls and what direction we take in the short term trading, I think that tends to be still very discretionary for us.
And do you think that a lot of it also comes down to the lack of quantitative data that is available still?
No. I think there is enough quantitative data, and there are a lot of guys who have successfully executed quant strategies. I think it's more a function of the DNA of the trader. I mean, different strategies work for different people. And I think we are more comfortable, managing risk on a discretionary basis.
We mentioned the metaverse and NFT cycles that we've seen this year. A lot of people are probably still skeptical about it, or they can't visualize where that is going. What do you see as the outcome in the next 3 to 5 years, and how are you looking at that from an investment standpoint?
Yeah, I mean, the perspective that we take here, is from evidence that we've seen, right? The take up of Axie Infinity in Philippines and Indonesia, it's been huge. It's been incredible. It's been life changing for these guys. In Indonesia, for example, the typical low income earner might earn $10, $20 a day. They play Axie Infinity, they can earn $50 to $100 a day. That seems small, but it is quite significant, right? We've seen the uptick on that in a very, very big way. So there is that element where gaming, in a related basis, NFTs in-game, along with the metaverse, in-game metaverse, right? We are very confident that it will be huge from what we've seen, right? I think that continues to grow, and a lot of that comes out of Asia. Vietnam is one of the biggest places for this game development, and we are seeing a lot of excitement on the ground there. As to how exactly it would be, not my area of expertise. I sort of am following the trend here. I don't completely understand, and I don't play these games often myself. But I've seen how much impact it's had on certain communities, and I think that's the reason why we believe in it.
Maybe what are some of the differences that you may notice, between the US markets and the Asian markets of some things that may be on our side that we don't realize what's happening over there?
Well, the Asian market is a very diverse one. I think there's been a lot of excitement in the wealth segment of the space. So the lower income, students and a lot of the might be semi-crypto native or new entrants to the crypto space. They've been coming in because of the gaming side of things, and some to a large extent as well as the DeFi side of things, right? They're suddenly given financial freedom and access to very high yielding products and high return products. The wealth segment in Asia has been revolutionized as well. I think there's a lot of interest in crypto, particularly in the venture side of things. So, the returns have been too hard to ignore, right? So there is money pouring in from the private wealth, high net worth, family office segment. So we are seeing the landscape quickly change. The Asian banks have been very involved as well. A couple of months ago, I think it was a Sime Commercial Bank that bought an exchange. I think this is the first traditional bank, to buy a big stake in a crypto exchange. That's significant, right? I think you can tell the sort of forwardness of the Asian traditional segment, that they are being very progressive in terms of how they're approaching crypto. Partly, I think also due to the clarity of regulation in the region. Singapore, Thailand, Indonesia have quite clear regulations on crypto, and it allows them to maneuver the space a bit better, I would say.
Some areas have different restrictions, or you keep hearing of different banning. Is that typically always just FUD, or how do people kind of view that?
You mean like China and India?
Yeah, or just there's always noise, right?
I think a lot of it is real. The ban in China on mining is a real one. We've seen a lot of the miners move out. The ban on crypto as a whole, that one maybe not as significant as it looks, right? The crypto market is still going on there. People still trade on exchanges. People still trade peer-to-peer. Less marketing. But yeah, the hostility has been real enough that a lot of these players have moved to more friendly jurisdictions like Singapore. It's not fun, but it's immaterial, but might not be as severe as people think it is.
All right. How do you guys see yourself expanding over the next 3 to 5 years as QCP?
So, we've been very Asia focused, we've been very options focused. I think that remains. The venture side has been a big focus for us. I think that's something that we are increasingly focused on. The value that comes from there cannot be denied, so I think we're growing and expanding these areas that we have. One big area that I think that, we want to explore is the US market as well. I was in Miami last week. So much going on there, right? It's an incredible place. I think, it seems like the crypto capital of the US. And the fact is that most projects and protocols, I would say a majority of them, originate from the US. So I would say both for the trading business as well as the ventures business, having a presence in the US, I think is something that's important for us, something that we will look at strategically. But other than that, I think we continue doing what we're doing. I think, there is a lot of opportunity in Asia, in options, as well as in ventures.
Awesome. Last question we always ask our guests is, what is the biggest thing you have implemented in your life that has increased your net worth?
Oh, interesting question. I think being open to new ideas, right? As a trader from traditional markets, there is this temptation to think that unless something fits into that framework of market structure or how you understand it, it's not workable. But that's something that has been proven wrong time and time again, right? There are innovations that could be different market structures. DeFi, for example, that might be completely greenfield. And if you force that into your traditional understanding of markets, you are bound to leave some money on the table. Being open to, innovations that create new possibilities, I think that's very important.
Maybe that's why there's so many young people in damn crypto, right? They bring the new ideas for the to the space, right?
They're doing things that other guys would say is impossible, right? So I think the Ribbon guys, for example, two young guys, not traders, right? And they created this idea. I think that's brilliant.
That's awesome. Well, I appreciate you coming out. If anybody would like to get a hold of you or via Twitter, what's the best way for them to do that?
LinkedIn, Twitter, Telegram. We have a QCP broadcast channel that we have to do our market updates there. My Telegram handle is @Darius. So easy one, feel free to reach out.
Well, Darius, appreciate coming on today.
Thanks, Joe. Thank you so much.
Hey, everyone. Thanks for watching my latest interview. If you like what you saw, please click the subscribe button below to become a member of the Joe Robert community. Be sure to hit the bell to turn on all notifications so you always know when I post a new video. Tell me what you thought about the content in the comments below. I always read them and would love to answer any of your questions.